Did you know the United States is at real risk of another credit rating downgrade? If that happens, you and I are going to feel the financial consequences. So, the three largest credit rating agencies are S&P, Moody's, and Fitch. AAA is the highest score a country can get, showing it can meet all its financial commitments. But here's the thing. The United States doesn't have a AAA rating anymore. Back in 2011, S&P downgraded America's AAA rating. They pointed to the lack of a credible long-term plan to reduce debts and the last-minute debt ceiling crisis. Fast forward to August 2023, and Fitch did the same thing. The reasons: a lack of cooperation between political parties, irresponsible fiscal policy, and a reduced ability to manage the country's long-term financial challenges. Then, just a few months later in November 2023, Moody's downgraded America's outlook. They said Washington is too divided to manage the country responsibly, and the constant debt ceiling crises keep pushing the U.S. dangerously close to defaulting. And of course, there's the exploding national debt. So, do these downgrades actually matter? The answer is a big yes. Here's why. When a country loses its top-tier rating, borrowing costs for the government go up. That means interest rates for everyone else go up too, since most rates are tied to government treasuries. It also chips away at trust in U.S. governance, weakening America's position as the world's financial anchor. Honestly, the way things are going, I expect more downgrades. The government is continuing its fiscal irresponsibility, and sadly, it's the citizens who will suffer. I want to break this down so everyone can see how politicians are essentially damaging the country as finances. First, the U.S. government is in a massive amount of debt. With all that debt, they have to pay interest. Let's look at the numbers. In fiscal year 2020, the government paid $345 billion in interest. By 2021, it was $352 billion. In 2022, it jumped to $476 billion. For 2023, it was a staggering $659 billion. And for 2024, they're on track to spend $881 billion. Projections for 2025, around $970 billion in interest payments alone. Think about that. The U.S. collected about $5.2 trillion in total revenue. They're spending nearly $1 trillion, or about 20% of their entire income, just on interest. You can see how fast this is spiraling out of control. What will it be next year? According to the U.S. Treasury's own website, the national debt is now just under $38.4 trillion. At this rate, we'll probably surpass $40 trillion next year. And the more debt the government takes on, the more interest has to be paid. Let me explain why this is so irresponsible and why it could lead to more downgrades. The U.S. government owes $38.4 trillion. But who's going to repay all that money? It's the federal government's obligation, sure. But where does the money come from? Let's imagine the government has a clean slate, no debts, no surplus. Now, let's say the government decides to go to war and needs $2 trillion. They issue bonds, which are basically IOUs, and get the $2 trillion to fund the war from investors who buy those bonds. So, who pays that $2 trillion back? Well, the government's main source of revenue is taxes. That means the U.S. government will have to tax its citizens $2 trillion to pay back the money it borrowed for the war. They are putting the liability directly on us, the people. So, this $38.4 trillion debt isn't just a number. It's a massive financial liability that the government has created for you, me, and for all future generations. They are being terrible stewards of our money, and it's a situation we all need to understand. They say this debt is a burden for our children, for future generations. But personally, I'm not paying back that $34 trillion. I pay my taxes, I pay my fair share, but that colossal number, good luck with that one. Now, let's talk about why another credit downgrade is basically inevitable. The rating agencies don't just look at debt levels. They look at behavior, at patterns, at whether a government can act responsibly. And right now, America is showing all the red flags. First, we have rising deficits every single year. We don't even pretend to balance the budget anymore. It's just expected. Second, exploding interest costs. Interest is now one of the largest expenses in the entire federal budget. A third reason is the political dysfunction. Congress is more divided than ever, and they can't even agree on basic funding. The fourth reason is there's no long-term plan for Social Security and Medicare. The Social Security system is on track to become insolvent in about 8 years, and nobody's doing anything. And the fifth and most critical reason is that our debt is growing faster than our economy. This is the single biggest predictor of a sovereign debt crisis, and it's happening right now. If the United States gets downgraded again, the consequences could be severe. Mortgage rates could jump. Car loans would get more expensive. Business borrowing would slow down, and stock market volatility would increase. Foreign buyers of our debt could pull back even more, forcing the Federal Reserve to step in. And what does that mean? More money printing? If the Fed starts printing money as a last resort, it will lead to higher inflation, a weaker dollar, and more financial inequality. It's a vicious cycle. So, the big question is, can we fix this? Is the situation salvageable? Honestly, there are only 3 ways out. The first is to cut government spending. But that seems politically impossible. Nobody in Washington wants to cut anything because they'll risk losing votes. Every attempt to cut spending just becomes a political attack ad. The second solution is to raise taxes. This is, of course, deeply unpopular. And what about taxing the rich? Well, to give you some perspective, even if you confiscated every single penny from the 100 richest Americans, that would only be about $3 trillion. We're at $34 trillion in debt and adding $2 trillion every year. Even an extreme measure like that wouldn't even move the needle. The third solution, which is a bad one, is to print more money. And honestly, this looks like the most likely path. It's the easiest and fastest politically. But it comes with those heavy consequences. More inflation, more wealth inequality. And in the long run, it erodes trust in the US dollar itself. So here's my final word. America isn't going bankrupt tomorrow. But the trend is clearly not good. The rating agencies see exactly what we see. Exploding debt, soaring interest costs, and political paralysis, with no plan to fix any of it. Another downgrade isn't just possible. It's probable. And when it happens, Washington will blame everyone but themselves. But the truth is, they caused it. They let it happen. And the American people will pay the price. I expect we'll see another downgrade. Deeper into 2026 or 2027. Who knows which of the big 3 rating agencies will pull the trigger first? The best case scenario is that it's a nothing burger, but it certainly won't be a good thing. Anyway, that's my take. I'd love to hear what you think in the comments. Please subscribe, and thanks for the support. Have a great day.